Gold prices seem to take a beating this month, and to end the month we have a gold expert in. We have George Gero of RBC with us on the set, who's a multi-decade expert of the gold market. Thank you so much for being here.
And I thank you for having me. And of course, you've seen May, sell in May, go away, really work for gold, because we're down 6% this month. Today, May 31st, last day of the month, my birthday.
Oh, happy birthday,
Thank
George.
you.
Happy birthday.
And tomorrow is first notice day, so that means that anybody owning June gold contracts have to be out by tonight or tomorrow. They're going to have to declare intentions to make or take delivery and put up full money. Okay. So you've had big rollover today.
So we've seen a slide. We've got the gold chart there. This is the COMEX gold. We've seen a slide there. That's today's price, but we're seeing the slide down this year, basically, or over the past few months. Is this a temporary thing? What can we expect going forward?
That's a wonderful question, and we're range bound probably until June 17th, when the Greek vote comes in. And then we'll see.
It's the Greeks again. Everything's Greece.
Oh, yes, you're slipping in Greece.
So when you say range bound, what are we talking about?
We were talking about between, say, 1525, 1535 base and support area technically, and a 1600 breakout upside and resistance point. And we've been in this for a while now. And it seems that the gold is resilient, because when it does fall, there are buyers, and the buyers step in because they're hedging their loss of purchasing power in other currencies. Now, in euro terms, the gold has now become more expensive, obviously, as the euro hit a 2-year bottom today. I think it was 123 and change.
Yes, I think it was.
Yeah, and I think gold is going to do better later, because stimulus will come in some form or another.
Fed.
Exactly.
What you think. Stay with us, George. I want to bring in Tobina Kahn from the House of Kahn Estate Jewelers in Chicago. She joins us now via Skype. Thank you very much, Tobina. You run an estate jewelry store. What sort of buying and selling are you seeing in your shop?
I mean, I tell you, we are very busy in here. In the last couple of days, there has been some spikes in gold, and when that happens, people are coming in to bring in their jewels to sell, and we're paying very large dollars. Keep in mind, everybody always needs money. Whether the dollar is worth the same as it was yesterday, that's for another story. But we are busy in here.
So, Tobina, when the price falls, are you seeing people do the opposite, which is to come in and buy jewelry?
Well, that's a very interesting question, because in the last month we have clients in Greece, in France, in Italy, in Portugal, and in Spain, and they're asking me, the number one question. At first, I thought it was a joke. They said, how much gold jewels can I fit into my suitcase? And I thought, gee, well, I guess it depends on how big the suitcase is. But, there is some serious note to that, because they are not putting their money into the banks. They are very scared of the banks there, and they're looking to purchase jewels with it.
So, George, are we seeing that on the other side of the market with coins and bars and stuff?
Well, it's different.
Yeah.
And it's very different because, for example, last month in India, the jewelers were on strike against gold because of a tax that the government had levied on gold. Now, that didn't mean that the jewelry shops closed. It meant that they were doing other business, such as silver, platinum, and palladium.
I mean, they weren't buying gold.
They weren't, or selling gold, because it means that while the public wasn't buying gold, they also weren't buying gold from importers.
So did that have a global impact on gold prices, do you think?
Yes, it does, temporarily, because, of course, the strike was over. And the dealers went back, and of course India, the exchange in India does a good business in gold, and India and Mumbai, the exchange does a very nice business in kilo bars.
So that's a kilogram.
That's 1 kilo, grams. 32 ounces. By the way, during the Great Depression, 1 kilo of gold bought you a new Ford, Chevy, or Plymouth, and today it does exactly the same thing. So while you're talking about the gold price being down 6% this month, it's really up from January quite a bit, from 1,300.
So,
and
what about
down
year-end?
from 1,900 in September of last year.
Well, and what about year end? Where do you see gold at year end? It's now about
I
50.
really can't predict year end because
Really?
of
But you
political.
know everything.
I wish I did. However, you can't predict year end because you can't predict what may happen, what sort of stimulus will be coming on two continents at once. One to prop up Europe. One, of course, are weak numbers. Today you had PMI, you had ADP, you've had weakness and recovery. You've had a very weak stock market, obviously. We heard about that from Herr Dietrich earlier. And so to make a long story short, the purchasing power of the public is lesser than it was, but the purchasing power of people in other countries trying to hedge currency crises is getting bigger.
And they're buying the gold. Let's get a final word from Tobina Kahn of House of Kahn Estate Jewels. Tobina, what's your outlook? Are you optimistic for the gold price?
I'm very optimistic. I believe that with the trillions of dollars that the government is going to print both in Europe and here in America, gold is going to go up. The sky is the limit, in my opinion.